I hope you can hear and see us well. Welcome to our webinar dedicated to blockchain technology. We've got audience from 45 countries today. So without any much ado, we will start with introductions. My name is Sergey, and I'm joined by Tim, who's head of our blockchain department. And I've got 10 years of experience with the financial services industry with a focus on cross-border payments and remittances. So I've been working with the banks all my life, and I very well understand their pain points when embracing new technologies. And today we're gonna talk about how blockchain technology will transform the financial services industry. Tim, I guess you have to unmute yourself.
Oh, thank you. So my name is Tim, and I have more than 9 years of experience in tech industry. And I worked at different software development companies. And in the past few years, I co-founded and launched multiple startups. Currently, I'm working as a head of blockchain department at Intellectsoft. And today I will help you better understand how blockchain works.
All right, and a few words about us. Intellectsoft is a software development company specializing in building cloud and blockchain solutions for the multiple industries. Over the last 10 years, we've helped a number of global companies implement their digital projects across the US, Europe, and Asia. And we are also ranked as the #1 blockchain development company by Clutch.com. And today we would like to cover the following topics. We will explain the concept behind blockchain, its key features and benefits, definition of smart contracts, share with you some real-life use cases, and wrap it up with a comparison of private and public blockchains. So before I hand it over to Tim, a little bit of housekeeping. You can send your questions into the chat, and we will answer them at the end of the session. We will also make an announcement at the very end, so please stay with us, and over to Tim.
Thank you. So the big question everyone have right now is, will blockchain change our lives? And the answer is yes. And let us explain us why. So as always, we are short on time, so we have to make it quick. And the challenge for today is to understand blockchain in 10 minutes. There is a lot of information about blockchain and a lot of news appearing every minute. And it seems like you have everything you need to get familiar with this technology. But even me, with my tech background, in my time, I had to make quite a research to find the proper answers on the questions I had. So today you will receive all information you need for solid understanding in this area. So what is blockchain and how it works? A formal definition not gives us much. A blockchain is decentralized and distributed database, a public digital ledger that is used to record transaction. And at first, it's hard to understand what all these decentralized and distributed thing gives us, and even more, it doesn't sound like something revolutionary. But believe me, it is revolutionary. So if you asked me to describe it in a couple of words, I would say the blockchain is a chain of records that are connected to each other, and these records can be anything: transactions, contracts, accounts, personal info, and anything you need to be secured. And the other thing about blockchain, that it is a software program that runs on multiple computers at the same time. But let's dig more into details. So at first, blockchain is not just one thing. It's basically a set of technologies that was well known before, but someone came up with the idea of combining them, and combining them in a very smart way. So it became a spaceship. So what are these components? So I call them access keys, data fingerprinting, multiple copies, and the watchdog. And let's go through each of them. So access keys. In blockchain world, it's private and public keys. And you can think of it as a checkbook and a sign. When check is not signed, it's worthless. But from the moment it is signed, it starts to hold the value. And you can give it to anyone, and even bank will accept it. So this check is transaction, and the sign is your access key. And anything that happens on the blockchain should be signed by these keys. So how it's different from passwords? And the difference is that you don't actually have to show it like you do with your passwords when you're trying to sign into the website. You have to just show the proof that you have it, and that's it. And the most important thing is that no one can guess it, and it's too random, and it will take years to do that. Even blockchain doesn't know your key, so there is no way someone can hack a blockchain and get all the accounts from there. And the point that coming out from this one is that there is no one reset my password link in a blockchain world. So if you lost your key, you lost all your funds forever. And actually, it depends on blockchain type, but on public blockchains, you can have a bunch of keys, and it's just like your email accounts. And you can easily transfer all funds from one to another in a second. Okay, so the second one, data fingerprinting. So in blockchain world, it's so-called hash function. And it sounds complex, but it's just a lot of math under it. And that's all you need to know about it. So the key here is a special mechanism that creates an ugly string that represents data you've put inside. And each one is unique, but the same for the same data. And here's the example. So if you do a fingerprint of word intellect, you will have this ugly string. And if you do it again, you will have the same result as before. But if you change anything in that string, like first I to capital I, fingerprint will be totally different. So in blockchain, it helps to create a chain of data where each next record contains fingerprint of previous one. So if anything will be changed in the past, every next record will contain one fingerprint, and it will break the chain. So in blockchain, these records are called blocks. And in different blockchains, blocks are different too. They have different metadata, different amount of transactions, different size, but the rule of chaining them together stays the same. And that's why they are called blockchains, actually. Okay, so the next one, multiple copies. And in blockchain, it's called distribution. Imagine that someone hacked a record 24 in your database. And you know that it's happened because now chain is broken. But what should you do next? How to fix it? And here is where multiple copies are coming in. So imagine if you had exact copy of data that was hacked, and even 100 of copies of that data. Then to fix this chain, you just need to look at the other valid copies and update the record of the hacked one, and that's it. If Ethereum blockchain, for example, has around 20,000 copies running online at each point of time. So what it gives us, so there is no single point to hack. There is always copy to compare, and it's distributed across the globe, so you cannot physically turn them off at the same time. And the fourth block is the Watchdog, and it's the final part. So on a blockchain language, it's consensus algorithm, and there is a bunch of them. If you hear proof of work, proof of stake, proof of something else, it's consensus algorithm. And basically this algorithm decides which copy in the network is valid and which one is not. It's like a watchdog that constantly searching for hacks in your DB records. And in blockchain, it's happening on all copies at the same time. So 24 hours a day, every day. And if someone hacked you, Watchdog knows how to fix it. Also, for every transaction, it checks a sign if it's done by author. And it checks if this account has enough money to send. So let's see all components in action. You decide to send a money to someone. To do that, you need to know his address, you need to know his access key, and have enough money on your account. And then you create a transaction saying from address 1 to address 2, amount of 10 something, and here is my signature. You then connecting to the distributed network and suggesting your transaction on top of the others. And transaction gets added to the last block. This time it's block 25th. And after that, it gets copied to every copy in the network. So everyone gets your transaction. And then each copy of your database independently approves your transaction. So each watchdog, as you remember, checks your signature and checks if you have enough money on your account. And then each one independently approves your transaction. And if you have a majority of approves, your transaction marked as valid. And then each copy of your database closes the last block, block 25th. And fingerprints it using the data fingerprinting mechanism. And all new transactions will now land in block 26. And from now on, in block 25th, you have a valid transaction record saying that address 1 sent 10 something to address 2, and that's it. It will be there forever, approved by all in the network, locked by your key, fingerprinted, and watched by consensus algorithm 24/7. What do you have in the end? So the highest level of security, and no one except you can access your account. There is no single point of failure, and it works all day and all night. You can't cheat there, and there is no way to take something back there. And now it sounds like something revolutionary. And it's not just something distributed and decentralized. But there's even more than that. Blockchain can manage not only your money, but trust. And we now know that blockchain is unchangeable and public. And what if I can somehow say on blockchain, if you do this, I will do that. And from that point, the deal is done. And I cannot change it, and everyone knows about it. And a lot of scary and complex deals could be done in hours or minutes. Things that in the past required tons of paperwork, sell a house, borrow a car, share your medical data, anything. And it's all done in a way it can be broken, can be changed, and no one can stop it. And there is no need to trust someone to watch the rules or keep the papers. And that's exactly what smart contracts are. So this is code that runs on a blockchain, empowered with all blockchain security and immutability, and it's someone you can trust. So we prepared some real-life examples that can show you how blockchain solving problems for real businesses in FinTech, healthcare, and government. And I'll hand it over to SERGEI because he can say a lot more about that. So SERGEI?
Yeah, thank you, Tim. And now let's have a look at which industries and services are up for disruption and would benefit from this amazing technology in the first place. One of the first candidates is the financial services industry, where blockchain can bring about significant cost savings and result in improved operational efficiencies. So cross-border payments, lending, and equity trading are the early adopters of the blockchain technology here. The next vertical is government, where blockchain can bring its all disparate systems under one roof, and the authorities can issue citizen records, administer tax filings, or even run the election process with the help of blockchain. Same applies to supply chain, where smart contracts and real-time delivery tracking can transform the logistics. Blockchain in healthcare can also drastically improve patient record management and prescription administration. And finally, a real estate industry can greatly optimize its land registry and property records process. But it's not limited to these industries only. Overall, blockchain in this or another way will touch our lives and will have a profound impact on any transactional industry, regardless of the asset involved. It can be ownership rights, music, loyalty points, charity, donations, rental agreements based on smart contracts. Many transactions will even happen without any human intervention. For example, smart devices will be paying each other. And I've recently read that the blockchain IoT market is estimated to reach 7 trillion in the next decade. So much for the sheer size of a disruption. Now let's have a closer look at the financial services industry. We live in the world where customers demand real-time payments, lower fees, and want to have a seamless experience. However, the outdated financial system is unable to meet these expectations, and this is where blockchain comes into play with the promise of straight-through processing, better exchange rates, full transparency, and also compliance with regards to both senders and the beneficiaries. So no wonder that based on Santander Bank research findings, global banks can save up to 20 billion per year by moving their operations to blockchain. Now let's take a step back and check how the money is being sent around the globe now. This is the reality of multiple closed-loop networks which are run by intermediaries, and that's why it's a source of major friction and high cost. Say if I'm a businessman or an individual and I want to send, I want to transact with my bank, I have little choice but to use SWIFT, the corresponding banking system which has been around for the last 50 years. And if I'm sending, say, 100 euros from the EU to my friend in China, it would take probably 5-7 days to process the transaction until those money clear into my friend's bank account in China. Not to mention that he would be lucky if he receives 80 euros out of 100 cents, because the difference is just eaten up by correspondent banks in the form of lending fees and currency conversion. So this is the reality we live in, right? And if this antiquated system would be rebuilt using blockchain technology, this would result in a dramatic cost savings for the banks and their customers. It would bring a few second processing speed, real-time settlement and reconciliation between the parties. It would actually kill intermediaries and allow to move value over the internet as easy as we move information now. A customer would be able to send funds from his bank account in the EU to, say, WeChat, mobile wallet in China, all in a matter of seconds. So here, blockchain becomes an interledger, connecting multiple ledgers regardless of the currencies involved. Now let's have a look at how governments can reap the benefits of blockchain technology. So every government on this planet is baffled by an array of legacy systems which do not talk to each other. This is the reality we live in, right? They are prone to data breaches, the fraud, and characterized by long response times and multiple inefficiencies. So here, blockchain comes to the rescue as well and brings automation, enhanced security, better coordination among various government agencies, and provides an improved customer service to us, regular citizens. Essentially, government can manage one common ledger instead of 100. And we thought that Estonia, a tiny state in Eastern Europe, can provide a great example of pioneering the use of blockchain technology for the government needs. What they've done is that they've built a blockchain ecosystem providing a common denominator for multiple government services. So each citizen in Estonia has been issued a unique identifier, a digital fingerprint, allowing this person to transact with government agencies in an efficient, reliable, and secure way. Another great example, many governments are looking into the space, and I would recommend you to check out Smart Dubai because UAE is also kind of moving in this direction. Another good example of blockchain use case, which has a universal appeal, is healthcare. So about 1 million people die every year just because of the counterfeit prescriptions and drugs. So the current systems such as Medicare in the US and NHS in the UK can be easily manipulated when it comes to patients' records, medical histories, and prescription administration. And this is where blockchain can help to process new patients faster, track inventory, provide easy access to insurers and pharmacies, and reduce prescription fraud. And all thanks to, again, one common ledger instead of 100. And here we are back to Estonia, which has implemented this solution for the benefits of its citizens. As a result, they have created a more accurate medical records. They digitized 97% of all prescriptions, improved handling of insurance claims, and minimized medical errors. I guess this wraps up this section of our presentation, and now back over to Tim, who will explain the difference between the private and public blockchains.
Okay, thank you. So when you see you have a place for a blockchain in your business, you need to decide what blockchain you need. And there is 3 types of them. So public, and this one can use by anyone. Private, only you or your system have access to. And there is a third one in the middle. It's almost private and almost public. It's called consortium blockchain. So it's used when you need to share data between trusted parties, like banks, casinos, or hospitals. So we all know public blockchains. Bitcoin and Ethereum is biggest public blockchains. And everything I explained before is about them. So they are secured, decentralized, self-healing, etc. But there is also downsides. All information there is public. So privacy is problem number 1. And they are also not so fast because of the rules they have and because of the volume of transactions. Their code is public, anyone can use it, they're permissionless and totally transparent. Anyone can get a copy of data and at any point of time. And it's not the way to go if you need different access levels. So on the other hand, private blockchains, they have all benefits public blockchains has, but also they have higher performance. All rules they have can be customized. You can build them into existing system and have different permission levels there. And also you decide on the level of transparency. which data you want to be public and which one is not. Our company created a number of such products for our clients. We recently launched e-commerce platform that uses blockchain to transfer physical assets. And another great example is a consortium blockchain for casinos. It is in private beta right now, but we integrated blockchain there, and now they no longer have problems with transferring large amount of cash to another country for a tournament, or to wait a wire transfer for a couple days. They just exchanging tokens from their mobile phones, and all their accounts and transactions stored in blockchain. And after all experience we had, we can say that blockchain technology holds great potential. And when deciding on integrating with blockchain, make sure you got all these points covered. So you have to do great business analysis to understand your business model and find the best way blockchain can help in your particular case. You need to understand what blockchain type you need. It should be public, private, or consortium. And then you need to come up with final set of requirements. What do you need to store there? Will a P2P transaction be allowed there? Do you need smart contracts or not? Do you need to take fees, and where you need them? And where private keys will be stored? What performance and privacy level you need? All these questions will help you to define what blockchain you need to take as a foundation. And there is a lot of them right now, and all they are different. They have different consensus algorithm, different rules, different block sizes, and different performance. So some of them is multi-chain, parity, hyperledger, NXT, and a bunch of them. Next, you need to have good expertise in security. So blockchain in most cases will be just a part of your system. So you need to make sure that everything around it is done in a secure way too. Also, you need good expertise in smart contracts. All hacks and errors that happen around blockchain till now are mainly caused by bad smart contracts quality. And finally, blockchain in most cases will be just a part of your system, as I said before. So there also will be client applications like mobile apps, websites, APIs, different databases, and cloud infrastructure. So if you want to successfully build your own blockchain, you need expertise in these fields too. And I know Sergey already started processing questions we've got. Is there anything we can start to answer, Sergey?
Yeah, sure. Looks like we have a bunch of questions. So, well, yeah, I love this one. That's a good question. How my company can make money with blockchain? I'm gonna take this one from my side. Well, no doubt that implementing blockchain would mean a kind of a paradigm shift for your business operations, right? This would mean getting rid of intermediaries, as we just mentioned, and getting rid of a double entry ledger system. So a large part of your overheads will be simply eliminated in this case, and it will contribute directly to your bottom line, right? I'll give you an example from the financial services industry. Say, if you operate a global business and you need to pay your partners, merchants, distributed workforce, just move funds, overseas for your own purposes. Then there is a US company called Ripple. They have developed a cross-border payment blockchain platform, and they estimate that your cost savings for this type of activity will go down by 80% versus regular wires today, right? Ripple doesn't send money; they just facilitate a swap of assets, and as a result, the transaction takes 5 seconds to complete. They have about 1,000 transactions per second kind of processing speed, which is quite good. For example, Visa is doing about 4,000 per second at the moment, right? So it's not, but it's not only money that you save. It's also, saves your precious time. So it's 5 seconds versus 5 days. So you would also be able to significantly reduce fraud and realize cost savings associated with that. So reducing bank fees, fraud, probably more efficiency as a result of that will definitely improve your profitability and make it your business competitive kind of long term. That would be my answer to that question. Yeah, maybe another one. I guess that's what's on everyone's mind. Which companies are already using blockchain in their daily operations, right? Well, when it comes to banking and payments, it is the very same. Ripple, R3, a company called Blockchain, just the namesake of the technology. All of them, they kind of been courting banks, and Ripple, for example, signed up a few top banks like Bank of America, Barclays, JP Morgan. They just signed about 50 banks in Japan to run multiple pilots, right? So BBVA in Spain has recently conducted a transaction based on a smart contract where a company in Barcelona paid their supplier in Mexico for a shipment of tuna, right? And the good thing is that the whole deal was processed and closed in 2.5 hours, while the usual processing time is 4 or 5 days. When it comes to P2P payments, right, that's a kind of big chunk of the global money transfer market, right? It is Circle, Abra, and Virex. By the way, Circle money transfer is absolutely free of charge for the end customers, as they plan to monetize it through the kind of other value-added services at a later stage. So take advantage. Another example I would say of a kind of really real-life cases is a cloud storage. So for data stored in centralized service, as we know, is prone to hacking, loss, and human error. So there is a company called Storage, which is addressing this problem, offering enhanced security with their blockchain cloud solution. And among the big names in the IoT space, Samsung is working on a blockchain project which would allow devices to communicate directly. So they would be able to update each other's software, manage bugs, monitor energy usage, and more. And there are obviously many more examples, right? But the mass adoption is coming, so I would encourage you to watch this space. All right, Tim, maybe we can just pick a technical question. Is there still a chance that blockchain can be hacked and all the data will be compromised? Can you take this one for me, please?
Yeah, thank you, sure. So is there a chance that someday blockchain can be hacked and all data will be compromised?
Yep.
So we have to think about a blockchain as a concept. So if you think about blockchain, you have to understand what blockchain actually you are asking about. So if we're talking about Bitcoin, whether it will be hacked or not, actually every hacker trying to tear it down right now, and it's happening right from the start when it became popular. So there is how many, 8 years, right? And Bitcoin is still alive and it's still operating, and it's okay with that. So is there a chance that someday someone could hack it? So there's always a chance of doing that, because right now, basically, the thing that you cannot hack it based on the thing that it would just take too much time to do that with all technologies and all computing power we have right now. So maybe someday there will be a new technology that will be much faster than this one we have right now. So all the computers and everything will be much faster. But you should think of blockchain as not just a technology, but a community also. Because if there is a people that they want to hack it or break it, there is also people that want to protect it, and they will definitely work on upgrading it, changing the security protocols, upgrading the encryption to the level that will be hard even for this new technologies that will appear. So right now it is almost impossible to hack, but in future I think it will be evolving and progressing as a technology will be progressing too. So this is the answer.
Yeah, thank you, Tim. And another great technical question is blockchain scalable, right? So what happens if you keep adding kind of blocks in perpetuity?
Okay, thank you. So blockchain and scalability is actually deserves for its own webinar, and it's pretty good question, because this thing is the biggest thing that are being discussed right now about scalability of this thing. So recently I read a post written by Vitalik Buterin about their plans for the next 2 or 3 years. And the main things that are planned for these 2 or 3 years is scalability. So yes, there is a question in this area. So there is question about scalability, but I think it will be somehow solved in a couple years, 2 or 3 years, I guess, or even faster.
All right, great, thank you. Well, the next question is relates to kind of building blockchain on top of the existing legacy systems in the banking and financial services industry, right? So how cumbersome it is integrating with existing systems, right? Well, it might be cumbersome, no doubt about that. Everything depends on your kind of technical landscape and the current architecture. And that's why part of our service offering is to basically run a workshop where we would understand your current solution architecture and advise on the optimal way forward. But in a real life, you would probably need, obviously, a customer-facing app, right? A set of APIs, which would be connecting your front end with your relational database, which you have in-house. And then we would obviously would need to migrate data to a new set of rails. So your relational database, which you have in-house, would be able to use blockchain protocol and communicate with other databases, which are distributed around the world and are not part of your proprietary network. So I guess we can talk, right? So we would love to take a deep dive and better understand your requirements. So definitely this is something we can look into. All right. So Tim, can we take another technical question? What do you say?
Yeah, sure. So the next one we have. Could you please explain the difference between Bitcoin and Ethereum? And this is a pretty good question as well. So, so for the first, we need to define what they have in common. So they have the same consensus algorithm, and it's proof of work. And they both have currency. So Bitcoin has Bitcoin, and Ethereum has Ether, and they both are public blockchain, so anyone can use them. But there is also differences. So the first difference is that blockchain is the oldest one. So blockchain started in 2008, and Ethereum started at 2015. So there is a lot of fixes and new protocols integrated in Ethereum. So it is faster, and it's more modern, I have to say. So this is the first one, and the second one is approaches. So you can think about Bitcoin more as a currency, but if you think about Ethereum, it's more like a platform, because in Ethereum, actually, Ethereum is the first blockchain that offered smart contracts on it. So after offering that, the amount of things that could be done in this blockchain was very different from Bitcoin. And from that start, you can create smart contracts, release your own currencies, do crowdfunding, do anything like that in smart contracts. And the principle of EVM is also new there. And they have different communities because of that, because blockchain in Bitcoin, so Bitcoin have a community more concentrated on currency, and in Ethereum it's more concentrated on the platform. And from technical side, they have also some difference, and it is the implementation basically, and the block time, so the time that no new blocks appears in the system. So in Bitcoin it's around 10 minutes, and in Ethereum it's around 15 seconds or so. So they similar in some cases, but I used to think about them as different blockchains, as a currency blockchain and a platform blockchain.
All right. Thank you, Tim. Well, I guess we are running short on time, so we will probably move to the announcement. Right. Thank you for all your questions. And we also wanted to let you know that we will be publishing an ebook dedicated to blockchain. So you can take a deep dive and discover how it can be applied to your specific industry or company. We expect to share it in a few weeks. So please stay tuned for more. And well, now we would love to thank you everyone for joining us today. We hope this webinar has improved your understanding of blockchain. And obviously we would be happy to make your blockchain project a success story. Thank you so much, appreciate your time. Feel free to reach out to us and check out intellectsoft.net. All the best.
Thank you, guys.
Bye now.
Yeah, bye-bye.
Take care.